Good day, this is Shauna Casey, and welcome to this SOS educational webcast, RSU Base Camp, your staging area for the climb ahead. Due to the large number of attendees, no conference call service is available for this webcast. The sound will broadcast through your computer speakers. However, if you wish to ask a question at any time during the presentation, please feel free to type it into the questions and answers panel of your GoToWebcast console, and we will do our best to answer them as they come in. Any questions that we don't get a chance to address during the webcast, we will follow up with afterwards in an email. This morning we sent an email with a link to the presentation materials to everyone that registered as of 10 a.m. Pacific this morning. You can also find the link to the materials under the Event Resources tab on your GoToWebcast console. This session will also be recorded, and we will send the link to the recording and materials in the next day or two. I hope that all of you are familiar with Stock and Option Solutions, or SOS as we are more commonly known. For those of you who are not, SOS is a leading stock administration, staffing, consulting, and outsourcing firm within the equity compensation marketplace. SOS provides interim and permanent placement, expert project resources, and total outsourcing solutions. To learn more, you can visit us online at www.sos-team.com or call us at 408-979-8700. Next, I'd like to introduce you to our speakers for today's session. We are pleased to have Carrie Kovac of E-Trade Financial Corporate Services and our own Tim McCleskey on the panel today. Next is our standard disclaimer slide. We'd like to remind you to consult your own advisors before making any changes. As I mentioned, the materials are available on our website, and here again is the link. Thank you all for joining us today, and with that, I'll turn this presentation over to Tim, who will introduce our topic and cover the agenda. Thank you.
Thank you, Shauna. And you know what? Thank you, everyone, for hiking all the way up 10,000 feet here at Base Camp to join us. Just kidding. Just getting us right into the theme of today's presentation. Actually, Carrie and I were thinking if we ever did this presentation live, we could bring a tent and set it up from the panel, or set up the panel just inside it. I think that could be fun. But really, thinking more about this RSU Base Camp, it really is a pretty good setting for giving a good overview of restricted stock units. Often you might hear the phrase from 35,000 feet or something like that to describe an overall process, but not getting too much into details. That's kind of what we're trying to accomplish in this Beginner's Equity series, beginning with this webcast. Then for today, if you imagine yourself as maybe like a novice mountaineer, attempting a mountain peak of about 14 or 15,000 feet, a good base camp altitude is about 10,000 feet. That would be high enough to get you acclimated to be able to start on the tougher part of the journey. Today we're going to try to get you acclimated to a lot of what's involved in working with restricted stock units, including some discussion on who is involved, and we'll occasionally touch on some best practices and give some suggestions for certain situations. But for the details we don't cover, we have some links to material from recent webcasts listed at the end of the slide deck. Now, if you saw those disclaimer slides, we could have probably had a third disclaimer slide to make sure you know that Carrie and I are not professional climbers in any way, shape, or form. Just putting that out there. I've never actually been serious climbing before. Any reference to climbing is all in fun. I was actually recently invited by a friend to summit Mount Shasta, but when he mentioned I'd need an ice axe, I got a little nervous. I suddenly remembered I was busy that weekend, so maybe someday.
Yeah, right, Tim, anyone on the call that knows me will know that I do not camp at all. I do not own a tent, and the closest I would ever get would be glamping. So I think...
Awesome. Trailer camping. Hey, I'm up for that too. That's trailer. We could bring a trailer up to the panel. That would be great. But maybe someday I'll get out there. I do like camping. But the agenda here. So we even have a passport to adventure up in the corner here. We'll start by gathering our supplies. What is a restricted stock unit? What do you need to know from the equity plan from which it was granted? And I should mention here, we're really talking mainly about stock-settled restricted stock units. We may mention the cash-settled variation a time or two, but this hour is intended for just the stock-settled kind. Then we'll find out a bit more about our fellow climbers. Who are they and why are they here? How are they affected? It really does matter for you to know how your actions, especially in these equity vehicles, affect the others around you that you work with. Of course, as you start thinking about the events that occur with restricted stock units, we need to build in some safety checks. So what do you need on those checklists? This will be a good summary, but again, we actually have another webcast that went into plenty more detail. And I think, Carrie, you helped out on that one too, right?
Yes.
Anyway, so the way we've structured this, basically the life of a restricted stock unit, we're treating it like you're climbing a mountain. We're getting you acclimated, getting everything checked out so that you're prepared, so that once we've reached the top, that's when the restricted stock unit vests. And after that, we'll need to descend. So what's going to happen then? That'll be the descent. And as Shauna said, even though we're building in the Q&A at the end if time permits, feel free to type in a question throughout the presentation if you have one. We'll try to address it at that time. For any questions that you have we don't have time to answer, we'll send you a response within the next couple days. All right, so moving on, gathering supplies. It's time to actually take stock, pun intended, of what we have here and gather the supplies we'll need. Carrie, you want to get us started on some definitions?
I will, Tim. Thanks so much. Good morning, everyone. Okay, so we're starting at base camp. We're just gathering these supplies, some general terms that you should be familiar with. Restricted stock unit, or RSU as it's typically referred to. With an RSU grant, it's a right to shares at a future date, but no shares are issued at grant. Vest date, otherwise known as release date or lapse date. This is the date that the shares will be issued to the individual or the participant once the vesting conditions have been met. And typically companies follow a quarterly, semi-annually, or annual vest, and many companies tailor this to their liking and can get very creative with these vest dates. I will caveat that it is a full value award, which means that the grant is worth the full value at the time of vest. And unlike stock options, they don't have the potential to be underwater at the time of vest. So you do need to consider retention factors that could play in if employees vest too frequently, because very often they will look at that and see, when is my next vest date? When am I going to have additional shares issued to me? Subject to forfeiture. This is important to understand your plan's terms and conditions and what would happen in the event of an employee's termination. Typically, if an individual remains employed at the company, the RSU won't be forfeited and will not expire. But just as it's important to understand vesting terms, it's important to understand what would result in a grant being forfeited and shares not being released. Okay, moving on. Some more definitions for your toolbook. Constructive receipt. So constructive receipt with most RSUs is the time that the delivery of the shares occurs, which is usually at vesting. Deferral, and for some, an RSU plan will have a tax deferral feature that lets the individual elect the date that constructive receipt occurs after the shares vest. Of course, this adds a layer of complexity in terms of administration and taxation, so it's important to understand if this is allowed within your plan. Employment tax. So in the U.S., it's Social Security and Medicare, and non-U.S. would depend on the country whether they're taxed at all. There's any employment taxes that are applied. Income tax in the U.S., federal and state, and non-U.S., again, it depends on the country, and that could apply at sale date or vest date for the participant. And lastly, DWAC. I'm sure we've all heard this. This is the acronym for Deposit Withdrawal at Custodian. It's a common type of share transfer, and it basically requests the movement of shares to or from an issuer's transfer agent electronically. Okay, let's keep going. Some more things. Your plan info. So it's important to see, what does your plan say, and if you need help, there's some confusion on issues, that you get the help and understand what it is. You need to read your plan. That's the best way to really determine what does your plan say. And if there's any unusual features such as leave of absence, retirement eligibility, those are very specific features that require timely and accurate administration. It's not something you want to find out maybe the day before a vest. So if your plan is silent or it's vague in the language, then you should consult your legal advisors to ensure that you have clarity on the subject. And this is one of those things that's always better to ask than to assume. Okay, Tim, do you want to take it from here? Thanks.
Definitely. So depending on the location of the grantee, there may be tax due at vest, as Carrie was saying. It really depends on where, like what country you're in. But in the U.S., I mean, we talked a little bit about how taxes might work in general. But really, how are they paid? Since when RSUs vest, we're talking about actual shares that are then delivered. There's not necessarily any cash being generated. But here in the U.S., the IRS is expecting a payment of cash after this taxable event. And maybe shares are worth a lot of money, but they don't want your shares. They want cash. There are several possibilities for paying that, though. The grantee could physically write a check and deliver it to the company. The company could deduct the amount from their paycheck. Shares could be sold to cover the amount, which is usually called a sell-to-cover. That can be actually a pretty delicate subject matter, since then you're dealing with market price movements. Then there's the possibility of the company withholding some of the shares to cover the tax obligation. But to do that, the company is fronting the cash to the IRS or the other tax authorities, which that could be a hardship on the company's cash flow. But here we're talking about how the equity plan or the grant agreement play into those payment methods. A lot of times the available tax payment methods are stated within the agreement. They may sometimes leave a few choices to the employee to pick from, or maybe it gives the plan administrator authority to designate a certain method, or it might even mandate specific methods depending on the location of the grantee. Whatever the case is, make sure you know, just like Carrie said, read your plan, read the grant agreement especially, and know how your company is acting on it with the grants that are in place. It's especially important when setting up new grants or grant agreements or even new plans in whatever system that you use, to be able to put the functions in place that are needed to make it all work like it's supposed to, because that's what the employee sees as what's in the grant agreement, in the plan. Is that how it really is? And it should work that way. And you see the third point here might depend on the timing of the trading window. I've actually seen this both ways. I've seen where a company's policy is to allow these tax sales to be able to take place during a closed trading window without incident. I've also seen in more instances, and this leads to the bottom point of the slide, where companies have standardized their vesting schedules so that RSUs aren't constantly vesting according to each grantee's hire date. With stock options, it's a different matter, since it's up to the employee as to when they exercise their grant, so those can happen anytime. But one of the great advantages to these RSUs is that you basically have a predicted exercise date that is determined at the time of grant. So while there may be some RSUs out there with vest dates that might directly be related to an employee's actual hire date or promotion date, I've been seeing more and more companies adopting a specific quarterly schedule or annual schedule of vest dates, depending on what part of the year or quarter in which the RSU was granted. So say like a company wanted to avoid a sell-to-cover for a bunch of grants happening during a closed trading window. In order to do that, they would have to make the RSUs vest at a specific time each quarter. Not only does that help to avoid blackout dates, but if you're the one administering the grants and helping to process those RSU vests, it consolidates your work, so you're not always processing them multiple times a month, even several times a week sometimes. I like that a lot, but on the other end of things, you might get to deal with very large vestings, which might also come along with a large number of shares being sold at the same time. I think we'll talk a little bit more about that when we talk about how brokers come into play. So with that, let's talk a little bit about performance stock units, or PSUs, performance RSUs. These really are just RSUs with different vest schedules, right? Not really, and that's why we're only covering a couple basic parts to these. Earlier, we've had webcasts. A lot of places have had webcasts about this. Several books have even dedicated chapters to different types of equity grants that have performance characteristics. That's how significant performance is in the equity world. But let's not discount how the vesting schedules do differ from normal RSUs. The term performance broadly covers a lot of different possibilities of vesting criteria. Some PSUs may have metrics based on the employee's performance, maybe a product being released or other types of goals that the employee might be taking part in achieving. There also may be what they call market-based performance metrics, where it could depend on something like the stock price hitting a certain threshold or staying above a threshold for a certain amount of time. And then speaking of time, there could still be a time-based element to these, where they only vest if the employee or grantee is then still providing service to the company through a specified date. And equity administration system providers have greatly improved how they are able to handle these types of metrics over the years. because at least to me, it always seems like a company is trying to make them as challenging as possible just to be able to explain, let alone be able to plug it into an equity system. So just administering the vest schedules, while that can be pretty cumbersome, it has a lot of accounting implications too. If you're responsible for administering these, it does help to work closely with your provider to get them into the system just right because of how the associated reporting system will see them. But that's about all I want to cover on PSUs and performance in general. But let's look at who's climbing with us. So after you've packed your bags for the trip, you should probably know who's coming along, right? Who are your teammates in this with you, and how are they affected by what happens to these RSUs? And just look around the circle here that I have the main departments we're going to be discussing today. Right at the top of the circle is the broker and equity administration providers. They're not always the same institution, but they can be, and sometimes you actually might have more than one broker involved too. Then we'll swing around to payroll. We'll cover accounting and tax groups, legal and human resources. And of course there are more groups affected, employees or grantees among those obviously, transfer agents, but for this discussion we're going to stick mainly to these. So first up is the equity administration providers. Carrie, I think you might know a little bit about those, right?
Just a little. Thanks, Tim. Appreciate it. Okay, so we'll talk about brokers, equity administration providers. So one of the things that they can do is they can assist with placing block trades when you have a big RSU release with a sell-to-cover election. And you should work with your broker equity administration provider to determine what services and features they offer with regards to an RSU vest. Just to kind of put some clarity around this, when a company has a lot of employees vesting at the same time, or maybe if the stock's very volatile and there's some other issues to contemplate, and the tax election for these or for some employees is sell to cover, that means that a designated number of shares will be sold on the open market, typically the day after vest, and those proceeds from the sale will be used to satisfy the tax obligation for those vested RSUs. So what a block trade does is a block trade can be performed, which basically takes each participant's order and aggregates those into one order with the other participants' orders. So this results in one price based on the order execution. And again, that's a nice way to ensure consistency among those employees that are subject to a sell to cover. They can also help with administrative tasks. So communicating grants and grant agreements, collecting grant acceptances. Most, if not all of this, should be accessible via the platform that the employees access for information, but you should talk with your provider to see what tools and support they can offer. Some ideas that you can consider are electronic alerts, access via a mobile app, or emails to your participants. Sometimes even a call campaign can work, depending on if your employee population has access to laptops, to phones, and other things. But you really should consider your employee population, how to segment that, what your culture is at your company, and what would best work for that. They can also offer the ability to manage tax payment methods. Tim touched on that a bit. You should inquire about system capabilities with that. Some companies do like to offer employees a choice as to what their tax payment method is. Others will decide on the employee's behalf, but you should have flexibility there. And also managing the DWAC process after a vesting. DWAC was one of our terms early on. You can look into real-time processing and share availability for employees before settlement. So those are all the types of things that, or some of the things that you can talk to your broker and equity administration provider about. But that's not just it. Okay, so they can help multiple departments prepare for the vesting event. As you know, it takes a village to do an RSU release. Payroll's involved, legal's involved, HR's involved, not just the stock equity team. So there's lots of tools and resources that you can leverage, especially within the reporting system, that will provide everyone with the information they need, not just after a release, but before the release. So you definitely should explore all of your pre-release capabilities within your system. And your provider can show you reports to assist with share projections, mobile employees, both internationally and domestic, and taxes, payroll, reporting, everything that's going to touch from soup to nuts. Obviously, your Treasury Department wants to know what's going on. IR needs to know if any executives are having shares released. There really are a lot of different business partners that need to be looped in, and providing them with consistent and steady and accurate and timely reports is one great way of making them comfortable with the process and making sure that they know what's going on. And then you've got the employee side of it. There's a lot of account features that you can use to make sure that employees understand the value of what you're giving them. You need to educate your employees and empower them. And this is something that the company is giving to them as a benefit. And they need to understand the value of what they have and a lot of times what their options, no pun intended, are to do with those funds or to do with those shares. So work with your provider to understand what videos, what tools, modeling tools, or other things that are on-site and online that they can use. There should be training. You can sometimes have in-house training. But really the whole point of it is for your employees to understand the value of what they hold and making sure that they've taken the appropriate steps prior to a release to make sure that's a seamless and easy process. And lastly, flexibility in working with third-party vendors and automated feeds. You need to consider timing and cutoff for this. With mobile employee data, I know when I was on the issuer side, that was always a challenge. You want to make sure that you're getting everything before you need it. If you have employees moving, something to consider is when are you going to cut off that move date? Are you going to accept transfers and moving employees up to the day before the release, the day of the release, so you do the proper allocation? Do you want to maybe cut that off earlier? Taxes, tax information from payroll. Terminations is another important thing to consider, and how you can import and export this data. It shouldn't be manual. You should be identifying ways to use automatic feeds or automatic data that will make it easier for everyone involved, and that also helps reduce risk and ensure timeliness. Okay. Tim, you going to bring us down the payroll buddy path?
Yeah. And actually, we do have a question on what is the DWAC. The DWAC just has to do with most of the time when you're delivering shares from a transfer agent, like upon vest of an RSU, those are when we're requesting the shares from a transfer agent to the broker involved with it. That's DWAC is short for what? Deposit withdrawal at custodian, right?
That's correct.
Okay. All right. So next up, we have payroll. So they are most definitely climbing the mountain with us here too. And actually, you should first know, for me at least, most of the countries that I deal with through my clients, they want to know the associated income from RSUs at the time of vest. There may be different ways the local payroll in each country calculates that income, maybe an average of high and low prices for the vest date, or maybe it's just the closing price on the vest date or the date prior. But depending on where you have grants, payroll will need to know how to process that taxable event. Also, some countries treat RSU income completely different than option exercise income. So then it could really be a team effort of gathering the information between administration and the different countries' payrolls in order to just to do it right. So yeah, they have a big challenge ahead. So I have a couple slides on this here. So since we don't have a ton of time, for now we're going to just assume the taxable event is at the vest of an RSU, not at sale or grant or anything. So at vest, like it is in the United States. So payroll will need to provide year-to-date tax and income information to administration prior to the vest so that the tax rates can then be appropriately applied at vest. Since pay cycles, well, they're usually rather predictable and RSU vest dates are usually well known in advance, there shouldn't be a problem or too much of a problem with getting the right tax and income data from the payroll system at the right time before the vest date. With non-U.S. employees, payroll might also be able to confirm whether an employee's tax rate in the administration system is the correct rate to use. So there's some communication that needs to happen there, basically. What is important for payroll is knowing the schedule of these events ahead of time. As this second note states on this slide, the RSU events are usually planned out. So payroll should be notified well in advance and maybe on a regular basis going forward, depending on how often new vest dates are added to that timeline. Basically, how often are you granting new grants and what does that mean for the overall calendar of these vest dates? Monthly pay dates are common in countries outside the U.S. and semi-monthly or biweekly is fairly common in the U.S. So payroll already knows when they will have a significant amount of work on their plates. So if they aren't provided with the RSU vest schedule, that could put them in quite a bind, for example, especially when there's a large amount of tax to deliver to the IRS. And speaking of that, they're definitely going to want to know about situations involving $100,000 or more in federal, Social Security, and Medicare tax, in the U.S., that is. When that occurs, the IRS requires what they call next day deposit, meaning payroll needs to get the payment made by the day after the tax event occurred. So maybe it was just one RSU vesting, so payroll wasn't notified about it coming up, but it could be that the tax bill was huge, so payroll will need to drop what they might have been doing just to get that processed and sent. So these kinds of surprises are not just frustrating and inconvenient. They can actually, most of the time, be avoided with a little bit of planning. For other instances, though, like maybe when an RSU is accelerated when an executive leaves or a performance grant suddenly meets its metrics, it just really depends on the performance at that point. But you can't always plan in advance on those kinds of weird situations. But actually, I've found that it's in those situations that, as a stock administrator, we can build a lot of rapport with your payroll contact. Maybe payroll and stock admin are both in the dark when it comes to an unexpected vesting of stock. That usually happens more often with like a large option exercise. But no matter what kind of transaction it is, as soon as I know that there's a lot of income and tax that's going to need to be reported, I would notify my payroll contact to let him or her know what to expect. They definitely appreciate the heads up. And really, the more you get to know what others' needs are in this climbing buddies section and be able to help with them, the more they will appreciate you and return the favor when they can. So be as proactive as you can with this stuff. The last box on this slide mentions payroll could be limited by the system they work with. There are several systems out there and can actually be very flexible, but if equity or RSU transactions are a fairly new process in your company, there could be features available that you're missing out on. For example, if you have 100 people with RSUs vesting on one day, that could mean you and payroll are processing them manually, one at a time, entering the income, estimating the tax, matching up to the numbers you got from stock admin, and then submitting it before moving on to the next one and the next one and the next one. Check the availability of an import. Some equity admin providers have the ability to customize a report, get it into a format that you can use to put through your payroll system without much modification. Sometimes you might need a third-party vendor to make that happen. But basically, just check with both your equity admin team and with your payroll provider, especially when you know that there are some significant vests coming. It makes life easier. It might even get you home on time. Imagine that. I've known a lot of payrolls staying quite late, especially on those big RSU vestings. It's no fun for them. Speaking of workload here on this next slide, we have payroll basically has to consider the other income events, like I was saying, in a lot of cases, in addition to RSU vests and even pay dates that they have, pay cycles. Many times there's what you could almost call bonus season for companies. And although it's great for employees that are receiving that kind of pay, I'm sure we all don't mind bonuses, payroll is working hard to get it all right. So throw in an annual RSU vest on top of that, and they're probably going to go crazy. It's at that time when having a good import process would help significantly. Those companies in the planning stages of bonus payouts and RSU grants should consider the load that they're putting on payroll especially. Of course, then there's the confusion of mobile employees on all this and how to treat their income and tax. Like PSUs, this is a huge subject in itself. There's been a lot of things discussed through educational sessions like this, so we're just touching on it just a little bit. So like it says here, income and tax implications really start at grant. So it will make a difference where the employee was when they received that grant and what it means in that country. If a company has even a few mobile employees, we would always suggest that they consider getting outside advice to find out how best to treat those RSUs and really whatever other equity the employee is receiving. The Baker-McKenzie Matrix is a good resource for all things just different country related. It's not going to do everything for you, though. And of course, it really depends on how in-depth your company wants to get with mobile tracking as to what kind of processes should be put into place. But since we're really talking about payroll here, the point is to make sure your company has determined a policy for mobile employees specifically, and that there are good procedures in place for how each RSU vest is handled and then communicated from stock admin to each of the payroll groups involved, and then especially also to the employee. Many times the local payroll has to interact with the employee directly, and if they don't have the support they need for those tax calculations, the employee can be left very confused, and that's never good. Some companies actually build in outside support for the employee as well so that they're able to make sense of the tax implications, and they might also even receive help for filing their tax returns correctly. I've seen that, and that's a very, very nice service, but probably is costly. I don't know the details on that. So after payroll, we have accounting and tax. So this is basically the department handling the reporting of these RSU events on the company's books and disclosures. So while payroll needs to know about the RSU vesting immediately, the reporting group, accounting and tax, needs to know for the next reporting period most of the time. It could be the end of the month or the quarter. Either way, they are mainly relying on the data in the system to be accurate. Very accurate. We want as accurate as we can be. It really all starts with the valuations of the RSUs when they are granted, which is definitely another topic entirely, accounting and expense and all that stuff. It's actually really straightforward with RSUs, actually. Although this slide doesn't describe it, the value of a regular employee RSU is usually equal to the fair value or the fair market value on the date of grant. That becomes the fair value. And that's multiplied by the number of shares to give you the total value of that grant. So as long as that data is correctly reflecting in the system, the accounting department should be okay with that part. Other situations like non-employee valuations or modifications are, again, that's like a whole other webcast. We could get into a bunch of that. But to continue with data management, because that's really what we're wanting to address here, did the employee terminate, maybe decline the grant? For grants that end up vesting, what department or cost center is taking that accounting expense? And then for tax purposes, how was the income report, or what was the income that was reported? The company can likely take a tax deduction, so it's important to have both the participant data as well as the vest data spotless. And I'm not an accountant. Maybe Carrie, hey, are you? But I definitely don't like the term reconciliation item. To me, it means that somehow there was a mistake made somewhere. That means the numbers don't match up, and we have to consider the number of shares or the dollars when we're putting together the reports for the next period. But things like that are bound to happen. Late reported terminations, even employees becoming consultants that you don't hear about until it's way too late. Lots of things can contribute to reconciliation items, and we don't like that. Also, you see the last point here, the accountants of the company might even have the responsibility on their shoulders to track how a PSU is being earned and at what rate. That will tie back into the accounting implications we mentioned earlier. So how probable a PSU, performance stock unit, is to being earned and at what attribution rate? That's a very important calculation when it comes to expense each reporting period leading up to the vest, and then very important when you're finally earning it and truing it up to their final expense amount. So no pressure on that, of course. Next, let's actually move on to the legal team. So how are legal affected by a company granting RSUs? They're actually in it from the beginning. They're usually the ones drafting the equity plan in the first place, putting in place the language in the plan to be approved by shareholders, and then making it possible to grant RSUs out of that plan. From there, they are either writing and approving language to be used in the grant agreement. They may seek input from other climbing friends we have here as to what goes into the agreements. That would be nice because we all like to have our input as to how things are going to go with these equity grants. But like those tax elections we talked about earlier, making sure the vesting language makes sense with the intention of the grant. They may even put a change in control clause to cover what happens if the company is acquired or merged with another company. They should ensure, though, that the appropriate agreements are being used with the right grants, putting safety checks into place where there are more than one set of eyes on grant agreements. That would definitely help. I'm no lawyer myself, just like I'm not an accountant, not a lawyer. I'm nothing, apparently. So all that legalese that goes into these documents can end up being very confusing, especially when you're dealing with like very slight changes to slightly different grants. So definitely something you got to keep track of. That's plenty about grant agreements for now. But what else does legal do with RSUs? Anybody have any hints? Maybe the second point on this slide might give you a hint. Yes, Section 16 form filing. We have some common practices listed here for reporting RSUs. Like, did you know that RSUs can sometimes be reported on either Table 1 or Table 2? They are still noted to be restricted stock units, but sometimes they're allowed to be reported as a non-derivative on Table 1, as if they are the actual shares of stock owned by the reporting person. But that's the case only if, like we were talking about, this is mostly about stock-settled RSUs. This can only be the case if they can only be settled in stock. If there's any possibility of the grant settling in cash, the RSUs typically have to go into Table 2. But the advantage of that, if you can get them into Table 1, the advantage that has is that when the shares vest and become physical shares of stock, there ends up being no actual reporting event. So shares aren't moving between Table 1 and Table 2, so you don't have anything to report there. But the catch is that it would usually be the case for regular employee grants anyway, since taxes are due. Oftentimes, shares are withheld or sold to pay those taxes, so there ends up being a Form 4 need anyway to show that disposition of a non-derivative common stock. But for those non-employees or the board members with no tax obligations on RSUs, I've often seen companies having reported the RSUs at grant on Table 1 to make it easier at the time of vest. You don't have to worry about them at that point. Then also, legal might be responsible for writing or approving footnotes on form filings, but I'm going to let Carrie, I think you might discuss that a little bit later in more detail. Actually, I think that's all I wanted to discuss on legal. What do you have to say about this next point, Carrie?
Thanks, Tim. Before I do that, we do have a question. Someone asked, how can we obtain the Baker McKenzie matrix? If you go to the Baker McKenzie website and look for Global Equity Matrix, they'll provide all the information, and you should be able to download it, I believe, from, they might even have an app, but you might even just be able to pull it from their website.
Yeah. I think I've downloaded that app before. It is helpful.
Great. Okay. So human resources, another very important climbing buddy for us. And let's see. So they sometimes are responsible for grant agreements. And they can handle acceptance. They might be communicating them with employees. Again, every company is different, but I think the important thing to note here is that there shouldn't be any silos. If you have HR that's responsible for certain things, it's important to partner with them to make sure that you communicate, to make sure you know the timing, and that everyone's in alignment. Let's see. So frontline to employee questions. That's another thing that typically HR will handle, whether it's at employee education events or maybe new hire events. But you need to work together on the FAQs for that, because you're going to take a perspective in the stock team that will be different than maybe what HR would do. And I think it's good to collaborate together on that. And you can also lean on your vendor or your other peer companies for support with questions. So really anyone who's going to field questions from participants, whether again it's the stock team, it's the HR team, it's your vendor, should be able to identify common themes or trends. And you can also anticipate if you're launching an ESPP program, obviously we're talking about RSUs, but anything that is going to be new to them, that's the first time, maybe it's the first time vest, first time grant, tax season obviously is a big one for everyone. Those are all the times that you can anticipate an increase in volume in queries. So you can set expectations, make sure you're prepared, and also fine-tune the questions. If you seem to be getting a lot of questions about where do I find this, how do I accept my grant, maybe that lends itself to, okay, we're not clearly communicating the where, what, when, how, and why of things. So that's really important, again, to leverage HR and make sure that you can partner together and get some success in that area. And then employee communication plans regarding grants. So you need to make sure you're using easy-to-understand language. You do things in small bits. Everyone's attention span is a little less than what it used to be. We all have smartphones and other things that are distracting us, so we want to make sure that we're really addressing what the questions are, that they can watch it in bite-sized pieces or read it in bite-sized pieces. Watch jargon. We're all very comfortable with a lot of terms, but employees may not be, so it's important to make sure that we define things, that we simplify the language in easy-understand pieces. And then revisit it often, because things change, your plans change, your company culture changes. You want to make sure that you're addressing, we've got millennials, we've got people that are close to retirement, we've got all different types of people that are our employees. and different demographics, language barriers, other things. So you want to make sure that you're really sensitive to that and that you're making it as clear and concise and accessible as possible. And HR is always a great resource in order to accomplish that. Okay. So we've identified what I hope is all the climbing buddies. I'm sure there's others that maybe we didn't touch on. But now we're into our safety checks. So before we, as we're proceeding through here, we want to make sure we have everything lined up. And a lot of this will feel a little bit repetitive because what we're doing is we're honing in on some of the key pieces from our climbing buddies and from the introduction that you absolutely should be ticking and tying as you go through this RSU process. So the first piece of this is checklist. This is my absolute favorite. I am all about the checklist. And we all think we're going to remember something, again, thinking back to the shiny objects and squirrels and all the things that can distract us. But we won't because, again, things are going to change. We have staff changes. We have plan changes. So take the time to use these and revise them to suit your process and your needs. It's a great education tool. It's a great way to onboard something if you're adding to someone to your team. And it's also great just to provide these as an FYI to your climbing buddies. I'm sure a lot of you already do it for proxy. There's no reason you shouldn't do it for RSU as well. It's great for payroll to be able to look down and see the timing and when everything is going to happen. Same thing with HR, same thing with legal. You can never over-communicate on something like this. It helps reduce risk. It increases efficiency. And I mean, how cathartic is it to cross or check something off a list? Really, I mean, that's the best thing ever. So no excuse. Here's your link. Use it. Breathe it. Eat it.
Definitely
sleep,
agree
drink,
with that. When there's something happening, I'll throw a check. Even if it's something I've already done, I got to put it on a checklist so I can just throw the check mark on there.
Yeah, I mean, it's a great feeling. It's a sense of accomplishment, and it's also a really great practice to get into. So it's a win-win. Okay, so it starts a grant. So this isn't something that you should only be doing, 5 minutes before the market closes and you're ready to release. You should be doing a lot of prep in advance, so when the time comes to process a release, it's a matter of ticking and tying and off you go. And you can work with all of your climbing buddies on this. They should be able to help with anything during or hopefully after business hours as you're going through and going from the grants all the way to the in-between and then the actual release. But it's really important to start early and do it very comprehensively. Okay, next thing. So grant practices. I'll put on my auditor hat for a quick second, not that I'm an auditor anymore, but I'll say one word, reconcile. Oh my gosh, reconcile, or if you want 3 words, tick and tie. There you go. Pick whatever word you want, but it's really important to make sure that you match everything up to board minutes, to any kind of documentation. This won't only help you when you're doing your RSU release or grant practices or anything, but also helps you with the auditors. It helps you at year end. It helps you at quarter end. It's just really another best practice to have. So make sure that you're doing that ticking and tying. And then for grant agreements, does your company require acceptance? If you're not sure or if you don't know, this is something absolutely to consult with legal on or other outside advisors that can help you with this, depending on your circumstances. But and I'm not going to comment on the manual process of requiring acceptance. I'm big on automation. You should be able to automate what you can. And again, you have to consider your population. Is it paper, online or paper? Is it paper because employees don't have access to a computer at work? See if there's an opportunity to use a mobile app that they can access and accept. That's a quick and easy alternative to employees. It's easier for you. It's easier for them. And anything to reduce busy work is a great option. Who follows up and when on these grant agreements? So you can partner with HR or others for assistance, especially if you have a remote location. Sometimes it's a little more challenging to get a hold of some employees as opposed to those who are maybe on a main campus or more accessible. So sometimes if there's a local HR person that you can leverage or anyone else, sometimes just a business partner in finance or accounting might be out there. But, reach out to them, partner with them, set expectations, and this should be routine. It shouldn't be oh my gosh, it's tomorrow, we don't have an acceptance, can you help me? This is really something that you should be monitoring consistently. And Terry,
actually, I did have I had a director of HR. Like we would do the first follow-ups just in stock admin just to see if they would actually accept, but the director of HR said he would actually go on Facebook and bug these people until they accepted. I don't know if he ever did that, but he said he would. So that was
okay. I'm not I'm not advising stalking, but
no.
Whatever works.
No.
I mean, whatever works for people. But again, a desperate means desperate measures, right? And it's unfortunate in a way because it probably goes back to the education piece, and that you shouldn't have to track these people down to get them to accept. It's a really great thing that these companies are offering, these equity opportunities to employees. So maybe there's an opportunity for education or just helping them understand what it is that they truly have and be able to value that. But look for trends. Is there a normal acceptance rate? Is there something that you can see by location or from remote offices? Are they harder to penetrate? And again, work with your HR business partners. I think that's the best place to start with that. And then canceling a grant if not accepted. This comes back to, again, knowing your plan, consulting your auditors and legal, and make sure accounting, HR, and others are looped in on what your practice is and what your plan says. If you're not sure, again, consult your business partners if you ever have questions, because this is something that you want to make sure is absolutely clear before you process your release. And look, there's even more tax and payroll updates. Okay, so you're going, and again, we touched on this, but you're going to communicate with payroll prior to the vest. You want to ensure that year-to-date tax is being updated. Tim touched on the $100,000 reporting requirement. Mobility is a big piece too, and I'll say it again, you really want to minimize the manual exchange about this. You want to inquire about interfaces, system capabilities, and timing. These are all critical things, and you've got to figure out consistently what your cutoff is, what your approach is, and how you're going to apply it at your company and your circumstances. You want to confirm the taxes are set up properly. Everyone approaches taxation differently. I'm sure there's best practices out there as to how it's being done. Some people use minimum, some people use maximum with the accounting changes. There's a lot of ways to interpret it, but your equity system can provide a report showing what estimated taxes are, what the tax rates are that are being applied, and what the estimated taxes are. So it's absolutely important to do the sanity check prior to vest, and you can do that well in advance. You can do a pre-release, you can work it in a sandbox, you can take a look at it and make sure that you're checking it for accuracy. And again, if you're not sure, you can ask your provider or other peer companies that use the platform to determine how do they do it, what's their best practice. And then coordinate with payroll on the timing of RSU reports being available. They may not be aware of that RSU timing or know the tax rules, but if you give them the checklist, they can look at it and they'll know exactly what's coming down the pike, and they can prepare and be a good business partner for you and not delay the process at all. Okay. HR data, last-minute termination updates. I think I touched on this earlier, but you have to scrub and be especially careful with this in non-U.S. It's always painful if you release to someone who's terminated, and then you have to try to go back, and sometimes they sell the shares out of the gate, and then you have to try to get the shares back, or it just makes it a little bit more complicated for everyone, and it's not a feel-good thing to do. So a little bit of education to HR, to payroll as to why you need this information, what the implications are, and also talk to your legal team. I'm sure everyone takes a different approach. Some may say let it ride, and then you've got to consider the implications to the plan or any accounting implications. They may have an approach on how you would get the shares back, but again, hopefully you can alleviate any of those concerns by just capturing any last-minute terminations. And circling back to that retirement eligibility and LOA, we said, make sure you know your plan, and if you have any of these features, make sure your system is properly accounting for those and reflecting those in your system. And lastly, brokerage accounts. So we did discuss this also, but you need to make sure the employees have an account, they've accepted, the W-8 then is updated and ready to go. And this definitely, speaking from experience on my issuer side, this is not something to be doing last minute. This should be a continuous monthly or weekly process. It's an ongoing effort. So leverage your provider, leverage HR, leverage your peer companies for ideas and solutions. I think this is painful for everyone. It's hard for the employees to understand, but the more you can educate up front, the more you can set expectations. You get them in a good process, a good cadence, and again, use local HR folks to help communicate this and drive the success on this, and it'll make the release a lot easier.
And actually, we have a comment saying, kind of a suggestion, and I think I've used this before, where if if the employee is not responsive to grant agreement, if you're trying to contact them and they're just not responding, maybe call their manager. Get them involved, because you know what, it's something that they really would benefit from, as Carrie would say. So yeah, that's a good suggestion. Contact their manager. See if that can get things going. So yeah, now we are on the descent. We've reached the summit of the life of an RSU. We can bask in the glory of the successful vest, but that's not all yet. We still have to make our way down the mountain safely. And so by descent, we mean all the things that the players you mentioned before may get to deal with after the vest. So there are a lot of things you can do ahead of time. So I've said that several times in this presentation, but this is where it really pays off. So the first point here is for stock admin to set up the schedule ahead of time, have open communications between stock admin and the groups that are waiting for you, and notify them as your expected timeframes are going to happen. And Carrie said that before, just deliver your checklist to them. Maybe that'll help. Basically, legal might be waiting for information to create Form 4s. Payroll's waiting on that information to be able to submit to IRS or other tax authorities. Treasury or accounting will just need that tax information, since that's the only money being collected and accounted for. No price for these RSUs normally. These different groups will be waiting for stock admin. So because a lot of these deliverables can feel kind of like a race, kind of like we're trying to get this done in the next 8.5 minutes, other things you can do ahead of time are to document the procedures that work. So not just general steps, but as many details as you can have. Screenshots are vital. Consistently formatted data, that's gold. I love it when a report is the same over and over when I get it from another group, or if I'm delivering it to somebody else, if it's in the same format, that's great. For several clients, I've set up reports or files days ahead of time to be able to add formulas, check every line of what the output would be. Whatever you can do to help yourself be more comfortable with the reports, the better. For me, I like to have tables ready to go, like just to be able to drop in the data, check to make sure it's like I expected, and then I'm good. An even better situation would be as if you had somebody checking on it, so another set of eyes on it. So run a group of reports, you finish your part, hand it off to somebody else, have them sign off before it goes anywhere else. Actually, let's see, for the next slide, we have really more of the same, but this is mostly for payroll. And actually, we have a question, most common tax election used by companies. Carrie, do you happen to know that? I don't know. I see a lot of sell to cover and a lot of withholding of shares, but I think mostly I see sell to cover.
Yeah, I think those are the two main ones.
Okay, because I mean, withholding shares, that means the company has to be cash rich or enough cash to be able to pay for whatever they have going on vesting wise. But
sometimes there's a blend too. Yeah, so sometimes they'll do certain for one population or maybe for U.S., and then they'll take another settlement method for non-U.S. So I've seen it mixed up a couple different ways.
Yeah, or like depending on level of employee, like maybe they'll use withhold cover for executives or something like that. But yeah, most of the time I've been seeing sell to covers a lot. So for this slide, we're talking about payroll. Alternative to waiting on stock admin for the data that they need actually is to be able to just act on maybe the estimates that stock admin sent them prior. Send the payment as an estimate to the IRS on day one. And then when you finally have the approved data to work with, you just need to drew it up and adjust your next payment to the IRS as needed. So that lifts the burden of the time crunch from the load there. Another thing that can be helpful is to consolidate reporting needs. Maybe they're internal customers that you have. They have different needs as far as what data they're requesting from RSU vesting. Maybe they have always received a specific format in the past. Maybe that's required a bit of data or formatting manipulation on your part to make that happen. Since RSUs have become more popular, you might be dealing with a lot more and more data every time, like it's just going to keep increasing. So having to do a bunch of work to a perfectly good report from your system becomes rather annoying. Well, it could be time to take a look at all the reports that you generate, see if any of them can be consolidated. Maybe you have to do a little bit of customization to satisfy one customer versus providing a little bit more for another customer. Just make sure that no one's getting too much, like names, IDs off of the list. Obviously, Social Security, you don't want to include a lot of that kind of sensitive data to some groups. I just know I've had a couple of times where I took an inventory to see what I deliver to, and it's like, why am I running these reports over and over and just doing this one thing different to them? But obviously you're going to want to document whatever that you do, and if you have a list of reports, parameters, screenshots, draft email templates even, if you have all that saved and ready, you're that much more prepared. Just make sure that no one's taken by surprise. Prepare whoever you're changing things to, and just ask them if it's okay to do what you're going to do. So, all right, let's go to the next slide here. What am I seeing? I'm not seeing a slide. Oh, there we go. Carrie, are you there?
Yep, I'm right here. Okay.
There we go.
So really quickly, though, we do have a... Yep, we do have a question, and it's using checklists are great, but common pushback is it creates more work. Better to be safe than sorry. So how do you make it fun? Can you make it fun? And what are some consequences where a checklist was not used? So yes, I'm a big checklist fan, and I've used them. I would say that just speaking, again, putting on the proxy piece, because I know there's a lot more irons in the fire there, but we would normally do a kind of a pre-meeting. It may not be appropriate for RSU releases because this is happening more frequently, but if you have a big RSU release coming up, or maybe there's new folks to part of, one of your climbing buddies to payroll or to HR, it would never hurt to sit down, bring cookies, have lunch brought in, have kind of an informal, but just kind of go through it, set expectations, have that conversation. How to make it fun? I've never done this, and I can't tell you how it would maybe work, but the first thing that popped in my head is some kind of bingo or something that maybe you can do, or just afterwards, a little something to thank everyone for their hard work and helping make it a successful release. But I don't know, Tim, any ideas for you?
Well, I like cookies. Maybe that could be my answer right there. Perfect.
Cupcakes and cookies. Yes, let's get them in a nice sugary carb coma, and then they won't even know what hit them. Okay. So I just want to make sure we have a chance to get through. I think we only have 2 slides left, so thanks for everyone for sticking with us through this climb and descent. Legal's turn. So Tim did a great job of addressing this. I don't think there's much to really tap in on here. A little bit of sarcasm on the first bullet that you've already planned out your footnotes and had them approved, right? So I think this kind of lends itself to the prepare and communicate often and early. One of my favorites was also to notify IR. I think I had alluded to that earlier, but they definitely want to know if an executive is going to be receiving shares. You're going to file that Form 4, and inadvertently 1 or 2 shareholders is going to call with a question, or sell side, buy side. So you make sure that they're aware of this, and again, it should be on your checklist. And let's see. So moving on to the last slide. Okay, Tim, you're kind of more into the social media thing than I am. Do you want to address that first bullet?
Yeah, I had promised a hashtag, I think, in the description of the presentation. We have a few thrown in here, all in fun. But really, if you think about it, after that big RSU vesting afternoon, you've gone through like 2,000 or 3,000 RSU records, countless mobile adjustments, been through it all. I think that last hashtag really describes how I feel. I'd rather work outside, but I said before the chat to Sean and Carrie, it's going to be like 110 this week, so I've been sticking inside for the most part all summer. But yeah, I'd rather be outside.
Absolutely. So another thing is time to tell your employees about it. I mean, chances are half of your employee population has called you in the morning of the release asking where their shares are, not understanding that maybe they need to wait for the market to close, and just to give you just a little bit of time to post those to their account same day. But it's fun to send a notice out to let them know their shares are available. Sometimes that could be as easy as a confirmation of release, or again, they'll see the shares posted depending on the provider, but they'll see the shares posted to their account same day, or sometimes a day or 2 later, and that will indicate to them as well. But it's nice to be proactive on that outreach and communication. End of year statement, absolutely. Again, if it's something they can pull themselves online, and they can pull multiple times, because even if you send it out to them and email it to them, chances are when tax time comes around or when they go to sell the shares, they're going to need the statement again and again. So make sure you send them that confirmation, and then also end of year statement, so they can get a good snapshot of what they have, what they've vested, and what's to come. And utilizing the broker communication capabilities. Again, work with your broker to determine what types of communication tools and metrics and resources they have. There's a lot out there that can be leveraged. Again, it just depends on company culture, but don't shy away from something new and from saying, how they can help, because that's what they're there for. And that's it. Look, right under the gun. Any other questions, Tim?
I think we have no questions, but I mean, if anybody has questions, we can still address them offline. Shauna?
Great.
Sure, thank you. I'd like to thank Carrie and Tim who joined us today, and thank all of you for attending today's educational webcast. Please do look for an email in the next few days with links to the recording and materials. Thank you again, and have a great day. Bye-bye.